What's going on, guys? Mike here with Renegade Forex, and in this video I'm going to be breaking down a winning trade I took today on March 21st, 2023 during the New York session, trading the Australian dollar and US dollar. And this was a short trade that I took, and it was a total gain of technically, I guess if you just took one position, it would be plus 8R. But I added to my position, so I haven't actually done the full calculation yet at the time of filming this, because I still do have a 10% partial running from both positions down in this area here. And so I'll break all that down here in just a minute. But yeah, I wanted to do a breakdown of a winning trade, and this is part of the package of being a VIP member. I want to do, every time I get a winning trade or a losing trade, I want to break down the thought process behind it and why it either worked or didn't work. And so in this video, I'm going to break down this winning trade. And so, like I said, this is on the Australian dollar, US dollar right now. At the time of filming this, this is the only thing I trade. However, I am going to be considering adding in some index funds to trade as well. So that's a bit of a different story. But yeah, let's go ahead and break down this trade and why it worked. And in order to do that, I'm going to go ahead and back up a little bit in time and show kind of why, like the framework behind why I was placing this trade and why I was watching this area. So first of all, the Australian dollar is, in my opinion, getting ready to continue, well, and as I guess evidenced by this, getting ready to continue a bearish downtrend on the higher time frame. And so let's go ahead and let me just start from the beginning here. I'm gonna go ahead and get rid of this. This is the entries, just to show the entry and the timestamp of the live trade. I'm gonna go ahead and get rid of that. And let's go ahead and go up to the 4-hour here, just to kind of paint the overall picture. So overall, we can see, even if you go up to the daily chart, we've been in a bearish downtrend for quite some time. And that's after price rejected from a daily and weekly supply zone up here. So ever since then, we've got swing structure forming here, swing structure, and then we had this break of structure down, and then we pulled back up into this supply zone, which is a daily supply zone, this box right here. I'm just viewing it on the 4-hour. So this daily supply zone was tapped into a couple days ago. I think it was maybe Friday. I can't really remember. Let's zoom in here and see what's going on. So this was actually yesterday, or no, I guess technically Sunday night was when this supply zone was tapped into, which we can see failed to make a higher high at this point in time. So let's just zoom in, make this really clear here. You can see marked by this wick, price failed to actually make a higher high. And I guess technically it did break a little bit above it, but like not very convincing. And then directly after that, it did sell off and cause a 4-hour change of character. And so at this point in time, I would be preparing, if you were watching this chart live, I would be preparing at this point here for a retracement back up into the zone to mitigate this order block or mitigate this buy to sell candle before continuing on down. And so yesterday during the New York session, we did see that retracement back up into this zone, reversal on lower time frames, and then continuation. And so I was actually jumping in with this winning trade. I was jumping into the continuation here and targeting this 4-hour low, and then holding a partial to hopefully, ideally, if we're right, continue and just swing it down to this daily low, which I have a hard time doing. So we'll see if it actually plays out that way or if I end up closing it somewhere in profit. But that's the expectation of what's going to happen on the higher time frames. And so basically, yeah, like I said, this trade today was just jumping in this, the continuation of this mitigation up here. So let's go ahead and drop down to a little bit lower time frames where we can get a better glimpse of what's actually happening and why price is doing what it's doing. So at this point, it's really important to remember that this candle right here is a valid supply zone, because we have a change of character right here. So as soon as price fails to break above this and then causes this change of character, this becomes a supply zone. But if we drop down to lower time frames, we can see that there's actually we can refine it all the way down to this 15-minute zone here, which I have highlighted with the box. And we saw on Monday, the 20th, I think, yeah, Monday, it traded back up in to mitigate this buy to sell candle. I think before I said sell to buy, this is buy to sell zone on the higher time frame, causing this order block here. Basically, this is an order block being mitigated that's causing, on the lower time frames, it's causing the higher time frame to continue. And so I don't want to get too carried away because a lot of this stuff is going to be in the course and gone over a lot more in depth. And this service is more like narration based content on what's actually happening. And so, excuse me, essentially, price was bullish yesterday to come up and mitigate this zone that took liquidity. So right here, we had a hunt on, on stop losses or buy limits, and price then came back down and wicked here, traded back up to mitigate these orders that were buying to take out stop losses here. At the time of mitigation here, we then can see it come back up, and it actually, which I'll talk about this in a minute, it actually caused what retailers would consider resistance, I think, or resistance. I can't even remember anymore. Where there's basically equal highs right here to short from, which I'll get a little bit more in depth on that here in a minute. But basically, after in the middle of the night last night, price broke structure down here and continued the downtrend down below and kept going bearish to this demand zone here that we can see. And so I sat down to trade right around in this area here. I think it was about, let's see, I guess it's technically usually about 8 New York time. So right in this zone here, in these couple candles, I was sitting down to trade, doing my market analysis. And let's go ahead and get a little bit more in depth into this particular zone and what I was thinking. So when I sat down, I saw price wick this demand zone, come back up, and fail to go lower. So at this point in time right here, I guess it technically, depending on how closely you market, perhaps could have been considered a break of structure. But at this point in time here, after price retraced up and took out this high, I saw this as a 15-minute change of character. And in my eyes, what I had thought likely to happen was price come back up and mitigate these, or excuse me, clear out the liquidity above these equal highs. Because we can see, this is a very likely area that has a lot of stop losses behind it. And so I thought it may be getting ready to reverse and go long, to basically cause another order block up higher above these highs and mitigate this higher time frame supply zone even deeper. So I thought that could be one potential option over, it may be over the next couple days that happened. It could have been in one day like this move, or it could have been over the next couple days that price manipulates up higher. But I did consider that in the back of my mind as one option. However, as I patiently waited, I did see this wick form right here on the 15-minute. And then we had another change of character. I didn't actually mark it on my charts. I very rarely ever actually mark the stuff that I use to, show and to teach with. But we did have a change of character right here on the 15-minute. And so at this point in time, I came to the conclusion that what likely was happening was that this change of character had to happen in order for price to mitigate this supply zone somewhere in here. And at the time of drawing this, I actually knew that, basically this is the valid supply zone. I don't really care where it, how high up it mitigates. All I care about is that I'm painting the picture of what's happening here, and that the change of character happened after mitigation, which I'll break this part down here in just a minute. But the wick symbolizing the failed higher high and the change of character, this is like the textbook setup that I look for in almost every trade. I love to see like a really clear wick, which means that was just a liquidity grab, or also trying to trick buyers into going long here before hitting their stop losses down below here. And so this is a perfect setup that I watch for, and especially when you see this on the 15-minute time frame, that this is a very high probability And yeah, it's really likely that this is going to continue on. And so to back up a little bit, talking about the change of characters, when this change of character happened right here, actually, when this change of character happened, um, I knew that this had to happen just because of the way that price action plays out. Like change of characters are basically indications that the swing trend is changing, or excuse me, not the swing trend, but the trend within this range is changing. It's not an indication that the price is actually going to reverse and go, you know, you're not going to hit a home run off of it, but it is an indication that the trend on a lower time frame has actually changed swing structure. And so at the point of this change of character, I realized, okay, it is possible that price trades back down and continues up and breaks above this structure. But getting this wick here was a solid indication that that was not going to happen. And then a few candles later, we did get another change of character right here, which symbolizes what? It symbolizes that the swing structure on a lower time frame is actually changing trend completely. So you'll see this when we drop down onto a lower time frame, but this is actually a break of structure on a lower time frame, which is breaking swing structure, which is indicating that the lower time frame is getting ready to line up with the higher 15-minute time frame and continue this direction in our favor in this case. And so as soon as I saw this change of character, it started dropping down to a lower time frame. I mean, to be honest, I actually just I have two monitors, well, three technically. I use my laptop screen for my broker, and then I use the monitor that you're looking at. I usually have just the 1 minute or the 2 minute opened, and then off to the side, I keep my 15-minute and my 5 minute open. So I guess I have them technically all open all the time. And as soon as I saw this on the 5 minute and the 15 minute, I knew that it was very likely that price was actually going to trade back up into here to mitigate this order block or to mitigate this buy to sell candle or mitigate this supply zone, however you want to refer to it, and then continue on and take out these lows, which I'll talk about the target here in just a minute. But excuse me, the change of character here, as you can see when you drop down on a lower time frame, is actually a break of structure on the 5 minute. We still have a really clear wick, so even if you're watching the 5 minute, this is still a textbook setup. You can then refine the supply zone here. There's a few ways you can do this. If you trade the 5 minute, you can either you can refine it to this candle alone, so it would be this candle here, which to me is a little bit risky because we know on a lower time frame that this is still a valid supply zone within this wick. So what I would do is, refine it to include the top of this wick, and that would have you a little bit safer area for your stop loss. And you can see it did wick right in the middle of that. If you did refine it to this candle, you would have been safe in this case, assuming that you allowed for spread. Or you can drop down to a lower time frame and refine it even a little bit lower like I had set up before. So let me do that just to figure out and remind myself where I had the actual supply zone highlighted. Yeah, so on the 2 minute chart, I could see this candle here, and this is actually a perfect supply zone. If you drop down to a 1 minute, you can see price, it's actually still the same on this candle because the 1 minute candle, because this candle right here plus this candle made the 2 minute chart. If you wanted to really refine it even lower, you can see this sell off here pulls back up, and this candle here is actually mitigating something in here. I'm not going to go super low on time frame just because you don't necessarily have to do this, but even if you wanted to refine it even lower, you could see that this candle right here is what was actually mitigated at this point here. So if you really wanted to, I wouldn't recommend doing this just because you're going to take a lot of losses doing this, and also you need to have a little bit of room for your stop loss to breathe unless you have really tight spreads. And so at this point here, you could obviously, if you drop down to the 1 minute and you really understood how mitigation happens, you could have used this as your POI, but really don't need to do that to be a consistent trader and to be profitable. And so in the way I trade, in this example, I was using the 2 minute charts, which I've been leaning more towards lately, just because they tend to offer on Australian dollar US, they tend to offer a little bit cleaner points of interest, but that's something that we can go over in other videos. And so, yeah, basically saw this mitigation here. And I had a pending order right here, stop loss right above it. It got wicked in, got the wick entry, and then sold off, as you can see, obviously. Like, really don't need to narrate that part of it, but dropping down to the 1 minute, I actually did add to this position, and I wanted to show you guys how I did that and why I did that. And so you can see here, price sells off, creates a fair value gap, price comes back up, and it does fill that gap, and it also mitigates a supply zone. So perhaps if you're on a 2-minute chart, no, it's not going to be quite as clean. This, even though it's 2 candles, it is a supply zone that you can see here. Let's go ahead and mark this up. You can see price sells off, trades back into that, and respects the supply zone. Even though there's no break of structure or anything here, I would still consider this down move an indication that we're going to continue lower, which is exactly what I was trading. So we do have basically a shift of market structure. If I can get my trading view to work here, we do have a shift of market structure happening from this high here. We can see that price trades violently up, mitigates that supply zone, sells off, comes back up, fails to make a higher high, and then gives us a wick below. And at this point in time, I did assume that price was going to continue down lower, and I used this newly created supply zone that I'll mark here as my supply zone for an entry with a stop loss right above it. And so I'm going to annotate this just for newer traders so they can understand, but I don't actually, this is really messy. Like, I can't stand having my charts look like this. So another trade right there. And this is not my normal full risk amount. When I add to positions, I have my own trading plan that I follow for adding to positions. So it's not actually like full 1% risk that I'm risking on this order. But nonetheless, I still added to the position and caught, another trade that's basically the equal size as the main position here. And so at this point in time, price retraces back up and it mitigates this supply zone. It then sells off, and you can see another break of structure happening here. And I guess technically, if you're trading flip zones, which I really don't like to trade, you could have also caught this little breakout and retest of supply zone. I am not condoning breakout and any type of breakout trading. It just so happens that in this case here, this flip zone was mitigated almost immediately after breaking structure and continues to sell off. And so at this point in time, we do have obviously a winning trade. I mean, in my opinion, I know as soon as I see something like this happen here, I know that this is very likely to continue on unless my bias is wrong or unless news or something like that happens. And so, yeah, let's go ahead and talk about the targets now and help you understand why I was targeting what I was. And so to do that, I'm just going to go ahead and go back up to the 4 hour really quick and show you kind of why, what I have marked up and why I'm targeting what I am. And so let's always remember on the higher time frame that this was a pullback here, and we're trying to catch the continuation down to this daily low. And so basically, the long-term target of this, eventually, the expectation is that price is going to hit the daily low down here. And full disclaimer, I do not swing trade. I'm horrible at swing trading, but I'm trying to get to the point where I leave a very small partial on so that I don't, cut the potential profits off from my trading. And I want to try to get to the point where I can hold stuff down here. And that's the expectation of what's going to happen. And I see that happen continuously. So I'm getting to the point where I just want to hold a little bit to kind of solidify the strategy and the expectation. And so the long-term target would be down here in this low, because if price is going to continue, it's got to pass through that to make a new low, somewhere down in this area down here. So that's the longer term target. For the shorter term target, for the 8R that I was targeting, it's actually just this candle's 4 hour low. And so I'm going to do a little bit of multi-time frame analysis to, show this, but I don't want to get too deep into it because a lot of this stuff is in the course, and I go over this pretty in depth. So At this point in time, to back up to what we were talking about in the beginning of the video, we do have a retracement here, a rally that wicks into this supply zone but fails to make a new high. It then comes back down and wicks this low and causes a change of character, at which point price, to some degree on the lower time frame, either trades up and then back down, or it just trades down and then continues. We'll see here in a minute when we drop to the 15-minute. Really doesn't matter either way. It just causes this low on this candle here. And so when price trades back up to mitigate this zone, and we can see on the lower time frames that it's not actually going to make a new high and it's going to reverse, this becomes the target. Even if you're trading all the way up here, this can be your target. But at the time of entering this trade, it hadn't actually cleared this low yet. So that was the next major low that I was targeting, which allowed for that 8R gain. And so let's drop down to the 15-minute just to show where that was. So this is the wick on the 4-hour, and then it comes back down and wicks this low, and price rallies up, comes back down and wicks a little bit lower before causing the change of character and then the mitigation up here. So yeah, basically the bottom of this wick is that 4-hour candle's low. And this is the low that I was targeting right here. So if we zoom back in, we can see that 8R, 8.25R, whatever, was actually at this low here. Also, if you wanted to be more conservative, if you weren't understanding that higher time frame swing structure, you can also just target this swing low on the 5-minute after you see this reversal happening here, which again, something that I'm going over in depth in the course. So you could have, if you didn't understand swing structure and you weren't looking at the higher time frames, you could have just targeted here and gotten the 1 to 6, or like however you entered if you were waited for another confirmation. And that could have been your take profit level, and you definitely would not be wrong taking profit there. But for me, I just knew that at this point in time, with price coming so low to this low, we had that 15-minute change of character, all these confirmations, I knew that it was very likely that this trend was going to continue. And so that's why I held it just a little bit longer. And you can see, obviously, this was very aggressive. It within like one candle, one 15-minute candle, or even, this is the 5-minute, one 5-minute candle past this low here, it did wick this low for hitting my 90% partial. And so yeah, 10% of each of those orders still running, and we'll just see how low it goes and see if we can continue to catch that daily low. And yeah, that's pretty much it. So basically, there's quite a few ways to take profit, and I go over this in the course again. But you could have used these lows. You could have used, this low, like we just talked about, or you can use predetermined risk. Or if you are a swing trader and you are someone that trades, the 15-minute, and you didn't drop down to a lower time frame, maybe you are just holding more of your volume down lower. Maybe you have a lower target, like you want to start targeting these lows here. It really doesn't. It's kind of, that part's kind of up to you and your trading plan and how you want to trade. But for me, that 8R, if you can get that, obviously if you can get that once a day, every other day, even just once a week, that's really great gains to get on any account. I don't care who you are or what size you're trading. That's obviously a great gain. And that, that would even pass a prop firm challenge in one trade if you're trying to get funded. And so that's kind of the concepts that I hope to teach you in the course, is like a deeper understanding of how to actually catch moves like this and be able to do that consistently. And so in this VIP service, this is just more of like a narration and little bits and pieces and talking about price action and doing daily markups, more of like a mentorship rather than a course. And so that's why I'm just trying to keep it short and to the point. And so this is a good spot to wrap up this video. In the daily analysis, I'll go ahead and continue to update how this partial is playing out and see if we're right on the overall long-term bias of catching this daily low. So thanks for watching, and we'll see you in the next one.